here with the Metals Minute. Today's Wednesday, January 31st, 2024. Well, we've seen in the face of an announcement that interest rates will not be dropping or likely will not drop in March. In spite of that, we have all four of the metals higher from a week ago today. We have gold, silver, and platinum up 1% and palladium up 2%. And from a year ago today, we have gold up 7% leading the way. All the details are in the write-up. Today I want to talk to you about the inevitable rise of gold and silver. Now we have to remember, just because they don't expect to lower interest rates in March doesn't mean definitively that they will not. There's a lot of things at play that have just been announced this week. There's massive layoffs among shipping companies like UPS laying off 12,000, and we have banking industry laying off thousands among several different regional and large banks. And so there's a lot of instability in the banking industry right now. Some major banks lost 30 or 40% of their share price in one day's time this week. So those issues are not yet settled. There's a lot of difficulty. It's also reaching across the banking industry in Europe. Layoffs announced, and so there's a lot of things going on there that may pressure the Fed to go ahead and lower interest rates. There's downward pressure on wages right now with all these layoffs. And so something to keep an eye on. We'll certainly keep you abreast of what's going on there. But another thing we want to look at is there are some really rosy GDP numbers that were put out for the fourth quarter of 2023. But when we look under the surface, what we see is that it has taken $1 of debt to create every 36 cents of growth. Another way to say it, $3 of debt for $1 of growth, approximately. And so that's the opposite of the way it used to be. It used to be $1 of debt would create $2 or $3 of growth. But there's so much debt now in the system, it's become much less effective at causing growth, and the increased debt load is going to put pressure on interest expense along with all the increased layoffs that are being announced. So we may see those interest rates cut sooner rather than later. And the thing to keep in mind there is the announcement that rates were not going to drop didn't prevent all four of the metals from rising. And so whenever they are cut, typically what happens is in the first 30 days after the initial rate cut, gold is typically up 6%. Silver is expected to have record demands for 2024, and gold never moves in a vacuum. So when gold takes off from that initial interest rate cut, silver will probably outpace gold. So that's why I say this year we're looking at an inevitable rise for gold and silver. And we encourage you to take advantage of the temporary lull right now while they're still deciding when they're going to raise interest rates. Because I believe once that happens, it's going to be off to the races even more than it already is. So thanks a lot for tuning in. We'll talk to you again soon.